Hello and welcome to ATFX's RBNZ Rate Decision Preview. My name's Nick Twydale, I'm the Chief Market Analyst. And as always, quick reminder, do please subscribe to our channel so you get all the market updates. Interesting times for us down here in the Antipodes. Today we've got the Reserve Bank of Australia due to make its first rate cut of its cycle, and the first one for 5 years. But today we're not focusing on this side of the Tasman Sea. We're going to move across to New Zealand for tomorrow's action and the RBNZ, where they are expected to deliver a third big rate cut of 50 basis points. And you can see this reflected well with how the Kiwi's gone recently. But the market's been pricing this in. So New Zealand tends to get hit harder and faster than, say, the Aussie. It's got a bigger economy and also recovers a lot quicker as well. So we do tend to see a lot of volatility. Liquidity is never so good for the Kiwi dollar, but provides plenty of fantastic trading opportunities. And that's what we're going to look at today. The RBNZ has cut 3 big 50 basis points cuts as we've seen, like GDP moved them into recession over 2024. And inflation came down to 2.2%, which is nicely in the middle of their 1 to 3% target range. But they're still looking to sort of ignite the market again and ignite the economy. So I'll move over to look at our charts. Then we can look at some of the trading opportunities we've got in the Kiwi dollar. We'll look at both the daily chart, which gives us those longer term trading opportunities, and the hourly as well, which will give us those sort of like instant returns for those traders that like to get in and out during the day. So here we have the daily chart for the Kiwi, and like we've taken this nicely out to give you a good indication of what the Kiwi dollar's done over the last few years. And like if we look all the way back here to sort of 2014, which is where the start of this longer term trend line comes in, we're all the way up at 88 cents, and like, you know, an unheard of characteristic for the Kiwi dollar, nearly touching parity with the dollar. But I suppose we're back to a bit of reality nearly 10 years later, over 10 years later, back down to sort of 57 cents. And it has been a big move down. Here's the, and as I said, this is the much longer term chart from 2021. We have moved down from that sort of like mid 70s level. And I'll bring this into a little bit more contrast and give you a bit of a closer idea on the swifter move. So here we go, October 2024. So not that long ago, we're up at 63 cents. We've moved all the way down to a 55.20 low in the meantime of that. As we all know, we've seen the dollar accelerate over this period as well, especially from November. So this move here where the Kiwis moved lower against the US dollar and it got hit harder than some of the other majors. That's come on the back of what we've seen with the dollar appreciation from the red sweep from Trump coming in and from what is considered to be inflationary pressures for the US economy. So we've always got to take into account that US dollar side of this equation. But as you'll have seen over the last few weeks, we've seen a nice bounce off of these sort of 55, just above 55 cents level, and we've come up 2 big figures. We're now sitting a little bit more comfortably, well lower than where we've been before. But a nice bounce, and it gives us a good trading opportunity. So anything more hawkish, or in this case, less dovish from the RBNZ, could see us move back up to this 59, sort of 66 level, just under 60 cents. Anything more dovish will take us down. Now, of course, the other thing we've got to take into consideration is if we don't get that 50 basis point cut, if we only get 25, we're likely to see a move to the top side. And that would be very aggressive, because I think I looked at one of the Economist surveys, 25 out of 25 on Bloomberg survey were gunning for this 50 basis point cut. It would be a big surprise if we don't get 50 basis points. If we got 0, we'd see Kiwi fly around, and you'd probably look to see Kiwi up to these levels, to these sort of low 60s. I don't think that's going to happen, and clearly neither the 25 other, maybe even more senior economists than me, think that's going to happen on that Bloomberg survey. So really what we're looking for in terms of trading opportunities, and this is the longer term trading, is the forward guidance that we're going to get from the RBNZ. So that comes from the monetary policy statement and from obviously press conference from Adrian Orr, the Reserve Bank governor. As I said before, we're unlikely to see hawkish comments come from the RBNZ governor, and there's a slight possibility we may today in the RBA, but unlikely to see hawkish comments, but it could be the less dovish one. So at the moment, just to give you an idea of what we're looking at 50 basis points now, and he basically told us that back at the end of last year that we're going to get it today. So it would be a huge surprise. The alternative is less dovish, which would see a move, and I think we'd probably see it for short term caps near that 200-day moving average, and this is on the daily, so it tends to be a stronger line, just under 60 cents. And then obviously there's room for a scope to move up towards that 62 cents. The other side, of course, is if we get more dovish hints. Now, as I said before, he told us we're going to get 50, and they're looking to downgrade more cuts, but they're looking to get down to 3% on the interest rates. That's a further 25 basis point cuts over the course of the year. He may mention uncertainty that we've had in the markets. That could throw a little bit more uncertainty into the markets with regard to rate cuts. That could see more volatility. But if he comes in and sort of says, right, I think we're going to need more rate cuts than we previously expected due to some of the data updates, but I don't think he's going to do that. It will challenge these lows relatively quickly. We're only 2 big figures off this on the bigger chart. Relatively quickly, I'm talking in days and weeks rather than the short term that we're going to look at on the hourly term. But here's your target down there, just above 55, that 55.15 level. That will be your target, and we could get a move to there relatively quickly. As I promised, we'll have a quick look at the sharper trading opportunities on the hourly chart. This gives you a much better idea of what we've seen over the last few months. There's that October high we saw on the dailies, all the way down to 55.15, as we've seen before. Here's that move again on the dailies. There's Trump getting in the White House. Bang, fairly big move from what we're talking about, nearly 60, above 60 cents, close to 60 and a half, all the way down to that 55.15. Here's the recent movement, and this is where there's going to be some good short-term trading. Now, this is where, if we do get the less dovish opportunity, there is a nice opportunity to trade this trend line. It's not the best trend line in the world. We're only really joining a high to a high, another couple here. But this high, it will give, if we're close to these levels tomorrow, the opportunity to buy that break, and it could take us back up certainly to these levels here. You see there's a bit of consolidation around 59 cents, 59 and a half, and then back up to the 60.50 level we were talking about, that November high before Trump won the election. So that's where there's a very strong possibility. And you will get a nice hard and fast move. There could be a good 100 points in there if you get that. Once again, if they come in more dovish, as if they're going to give us maybe another 50 basis point cut and sooner in the curve, it will take us down. We're probably going to be looking back to these lows again. So there's going to be fantastic trading opportunities in the Kiwi tomorrow. There will be volatility. One thing that probably some traders will be looking at, and haven't got enough time to go through it today, look at that Aussie Kiwi chart, because you could get the double whammy of a more hawkish RBA today, and they have remained very resolute on their hawkishness, and a more dovish RBNZ. That would see Aussie Kiwi move to the top side. But for the moment, focusing on the Kiwi, 50 basis point cut. If we don't get that, it really is off to the races. If we do get it, it's going to be on that statement, and it's going to be, I think, on the amount of dovishness we get. More dovish, downside move. Less dovish, and I think this is going in the recent trend, the move that we've seen up over the last few days, which is what most of the short-term traders will prefer. Then we do get a break of these levels, and we do see it move back to these 58.50, 59 cents, and then maybe even up to that 60.50 level. So great trading opportunities for the Kiwi on the RBNZ tomorrow. Once again, if you need anything from us at ATFX, please let us go, and please subscribe if you haven't already. Thank you very much.